Good day, everybody. Still here. Daily Market Pulse, Thursday, December 19th, 2013. So after a huge day yesterday following the Fed announcement, stocks, indexes are pretty much flat, kind of mixed, essentially. You'd expect some of that. On one hand, maybe a little bit of a pause, profit taking, but two, really the indexes are at a target. They are at a resistance level based on the previous highs. So now, what do they do with this level? Everything looks bullish, but they're right smack at a ceiling once again. So we're going to want to look at that. So mixed in lower volume today usually means profit taking, usually means a pause. That doesn't usually hurt anything. Uptrend currently at least still resumed for now. Still a high distribution day count. Makes you wonder. VIX, I'll show you. Very interesting pattern today. So it all starts to make your head scratch a little bit. We'll go see how it goes. Let's take a look at charts. Okay, Dow Jones, you can see the huge run. It broke out of the flag. So, at least the flag was in fact looking and acting like a bull flag. So we had the big run up, the pull, the flag, the push higher. So if that's the case, then we are looking at a measured move the size of the flag, or at least, on the other hand, half the distance perhaps of the flag pull or the full distance of the flag pull. All those would be considerations going forward. Perhaps even at a minimum, we're looking at some kind of an extension of a fib nature. So if we go top to bottom, then you're looking at the 16,600 level, which is to be the 1272 extension, as a possibility. That would be one way to do it. You might want to look at the pullback itself and do the pullback itself from here to here, in which case at a minimum you're looking at 16,300, then eventually 16,458 or so. That's another way of looking at it as a possibility. Nonetheless, you can see that there's a level of resistance here. I put those goal lines in there for a reason. That's there because you're looking at the fact of the series of highs, shooting stars, high levels, and so on. Levels where this may be a zone here of support and or resistance right here between 16.1 and 16.180. For now, didn't quite form a hanging man. Formed a little bit of a spinning top, which creates a little bit of a profit taking, especially on lower volume. That's what you'd expect. Could sort of drag to the downside, a little flag-like formation as well, could do that, or a little bit of a cup formation on an intraday. Any of those are possibilities, but essentially at resistance, at the highs, and what do they do now? Don't know. We're going to find out. But the breakout certainly occurred yesterday. Now, what do they do from here? Do they follow through or not? Let's go to the S&P. S&P was in a range, sideways, after breaking the polarity area at 1775. Up, down, up, down, up, down. So holding 1775 and then pushing right back up to 1810. No difference. It's been going sideways for a month. Nothing's changed except for volatility. The decline occurred pretty fast. The rise back to the top occurs even faster. One day from low to high, well, maybe three, but certainly one day. Well, actually, you could go as high as five, I suppose, because it went sideways. But essentially, yesterday was a retest of the low, and then boom, one day. Otherwise, it took about 3-4 days to get down from top to bottom. So, Hanami today, bearish in nature, near the session high from yesterday. So again, pause, lighter volume, profit taking, a little bit of a bearish. Essentially, that's not a true reversal signal. It's more of a signal of maybe the buyers have slowed down, maybe the buyers have stopped, but nothing confirmed as of yet. Resistance sometimes can be enough to confirm a sell signal, but this is not necessarily one of the strongest sell signals on the planet. So that's the S&P. It's still stuck in its range for the time being. Does it break out above, or does it come right back down again, mid-range or lower? We'll have to see. NASDAQ. Same thing, broke out, hit resistance, bearish engulfing, spinning top, doji, bearish engulfing again, and then right back to the same levels again yesterday. Bollinger Band declining, Hanami again. This Hanami is a little bit lower. It makes for a little bit weaker overall pattern. It's a little bit stronger bearish pattern, if you will, bearish signal. The fact that it's off its highs from yesterday. Same thing, range bound to some degree. About 4,000 is the key number psychologically, below 4,000, and on the top side where the goal line is, you're at 4070 to 4075, about a 475 point range right now as well on the NASDAQ. Is it going to break out to the upside or fade We're going to find out. TSX for our good old Canadian friends and family members. So it also, in a little bit of a channel to the downside, found the 50% retracement and then bounced. Nice formations on the way up. In fact, the candle sizes were getting bigger and bigger practically every day, including yesterday. Today, pretty good size again over the 20-day moving average, breaking out above a little bit of an area that near, what is that, 13,315. It needed to get, stay above that level, above the 20 and above that level based on the, see that series of lows and pivot area. Let me draw, I'll show you what I'm talking about right here. It's probably too big, but essentially, let me move it down a little bit. That area right there. So you have a series of lows and highs. It essentially was pivoting through and back there. So it was a series of lows, support, broke down, came back, tested the former support, now resistance, fell, and then blew right through it yesterday and today, particularly today. Now target comes back to 13,500 on the upside. 20-day moving average just starting to flatten, the 50 still rising, so all looks pretty good there so far, with room to the upside target and likely going to become overbought as it does so. US dollar, Canadian dollar becomes important, especially this time of year when people are trying to go south into the US for those Canadians shopping in the US. Dollar is no longer as strong. The US dollar went pretty strong yesterday, faded a little bit today, made a new high, but faded off that resistance dark cloud cover high at 107. So not good for those people, but on the other hand, if the U.S. guys are coming to Canada, then they can buy up a lot of stuff for a cheaper amount because the dollar is stronger on the U.S. side. Treasuries, boy, sideways. Look at the side. 1, 2, 3, 4, 5, 6 days, and the volatility increasing every single day, except for maybe today. And that last candle that just popped up there at 128 or 129 is essentially the start of tomorrow's trading session already. So it continues to slide down that red trend line, channel line, if you will, sort of testing support near 128 to 129 right now, but 129 trying to hold for the time being. We'll see if it can actually get any strength at all. But the candles are pretty small after all that volatility, so it makes you wonder if the selling's done, if there's going to be a bounce at least back toward 130, 131. 130 is most likely. All right, let's take a look at gold, because gold was fairly neutral yesterday, and then today failed hard. Big red candle today, right into the support zone of 1180 to 1210. So it's still in that support zone for now, and that goes and dates back to the lows back in June. So that's right smack into that area now. Let's see what they do. If that's the flush and done, if it's going to bounce like a snap back into the old trend and then go long, or is it going to fail below 180 and go short? Let's take a look at, well, the financials we probably haven't looked at in a while. We might want to take a sneak peek, because the financials sometimes can be important when it comes to how the markets are behaving. And we're same thing. We're essentially seeing a test now across the top of the highs. So Harami, Doji-like formation today, pretty neutral for the most part. So let's look at crude. Okay, crude rounded bottom, found support way down below here, 93, 94 area, bounced aggressively, broke the old trend, went sideways, swiped at 99, came back, retraced to the 618 based on the move higher, and has come right back into that level. Broke out above 99 today and holding steady. So now at this point, looking for a continuation of CL holding the 99 level here to maybe slightly lower into 98 or so as support. Of course, as deep as about 96, but really looking to hold this 200-day moving average, looking to hold the 99 level for the most part, up to maybe the 8 moving average, but going into 101 to 103 as a target next. On the upside, natural gas had inventories today, and it took off. So you remember it had a big run into the next pivot areas near 440. Did pull back a little bit, a smidge. So depending on where you do the fibs on this, up the top to maybe where the breakout area was right here, which I usually like to do. Usually on a breakout, I do that fib there, and it came right to 50%, which was 420, and then it held, got back through the falling window today, and then just boom, back to the highs again. So this is looking very good and strong to go back into 460. If you go all the way to the bottom here, there was a 764. So the percentage-wise, it worked out pretty nicely. So natural gas looks very good. Now copper, we may want to take a sneak peek at because, Dr. Copper being the PhD in the economy, it was acting fairly well. If you recall, it had broken out just several days ago, pulled back into support, collapsed fairly hard today, but holding the 8, holding the trend line, holding the support. Now the 20 moving average is about to cross a rising 50, and all these clusters of moving averages. It could dip into this to look for support and a test. Since the stochastic is still declining a little bit, it might do that. But the overall pattern for copper looks pretty good, which I guess bodes well from more of a bullish market, I guess, going forward. Question mark? We'll make it that way. Let's look at semiconductors. Everything's been kind of hitting the resistance highs and not going any higher. Look at semiconductors. Let me dip this down a little bit like this. So there was a polarity line, that rising window came back and it faded all the way back to the 50, came all the way back. Look at the volatility. So now it's range bound as well, 42 above and down maybe at 41 below to maybe as low as maybe 40. 40, 50 more like it, I should say, but 42 in the bottom. So at the top, you see the resistance at 42 here as well, like everything else, interestingly. And the VIX. So we had the huge pop yesterday in the markets. We had the huge decline on the VIX yesterday. And at one point during the day today, this was a hammer. So you see where it closed on the high. That high was a little bit lower. So the lower shadow was more than twice the size of the real body, so forming a hammer. But at this point now, it went even higher. So it's no longer a hammer, but it's still a pretty darn good reversal. It came into 13, bounced, finished at its session high. Markets were where? Markets went sideways, did almost nothing. So interesting to see what it's doing here. Is this going to fade further, or is this going to be looking like more of a bullish candle, almost like a hammer, and then pop back, at least back toward 15 or higher, and the market's fading further? That $1 million question. Okay, catch up with you tomorrow.